Okay, guys, in today's lesson, I'm going to show you how to take advantage of price when it pulls into a curve zone. Now, the curve is what we call a market edge on our highest time frame. So we're looking at the full contract of the NASDAQ, and this is the continuous contract, and we're on the 4-hour chart. Take a look at your market edge here. Do you see this rally, base, rally here? Let's box it out so that you could see the curve zone. This is our curve. Now, if you were going to take this trade, look at how expensive this is. Let's say, you want to buy one contract here. Look at how expensive this would be, okay? So you're looking at $2,300 there. $2,300. Well, how do we take advantage of rejoining this uptrend here while we're in the curve, the high time frame curve? So that's what we're going to discuss right now. Apply trend cloud, and you can see that, trend went 7 waves, candles turned ice blue, and what do we expect? Some sort of massive pullback, or in this case, trend reversal. And you can see here that we had this nice pullback, candles turned green, and then we got another deep pullback into this curve zone here, faking us out because we were expecting break above, and then a pull back into the trend cloud right here, finding some sort of support, and then the push up. Okay, but we didn't get that. Instead, we got a deeper pullback, breaking through some structure, re-entering the high time frame curve, and then our push up. So how do we take advantage of this? Okay, let's clean up the chart here. We'll leave that on because we're going to show you how to reduce your risk. We'll show you how to reduce the risk of this. All right, grab the vertical axis and place it on the candle that first enters the zone. Okay, so we're going to look at this as if we're just entering the curve zone, this massively wide curve zone here. Drop down to your 1-hour time frame right here. And the 1-hour time frame contains your CCI indicator, and we put a stochastic on there as well, our trend cloud cycle indicator. And right here, okay, is where price first enters the zone. Now, do you see how CCI indicator is below -200 here? It pulls back and we're still in the blue area. So this is still a massively strong trend to the downside. We can't take advantage of this yet. We have to wait until CCI breaks above 100 or 200 in order to start looking for pullbacks. So right about here, see how it just peaked above that +200? Not a very strong signal. And then it breaks back down, coming back into the curve zone, breaking slightly below the -100 until right here, where we break above. We have a nice solid break above +200 here. So at this point, we can start looking for pullbacks on our lower time frame. Let's drop down to the 15. Open that up. Here we are, 15-minute chart. Start looking for the structure that we want to see broken, okay? So we really want to see price break through some structure here, right there. Okay, and where does that take place? Well, we've got this pullback here, and we just kind of go sideways, right? Let's grab a gray box. Let's put all of this inside of a gray box to represent that consolidation. And we get a breakout of this consolidation area. Now we pull back, and we start, you can see what happens here, but we start to break above and sort of go sideways here until we get this massive movement, right? So what are we looking at now? We want to make sure that on that 1-hour chart, we don't have any breakdown of the CCI indicator below -100. So all the pullbacks should be taking place inside the cloud, okay, and above +100 without breaking below -100. And right at this point, okay, and you can see on your lower time frame here, see how the 1-hour chart is not yet in the green? The candles are green, trend cloud is green, but our 50 simple is not green yet. You really want to wait for this right here. You want to wait until everything on your trend cloud is green, right? Our line in the sand, 50 simple, and then the 15 and 34 exponential, which makes up our cloud. So right at this point, and we're getting some nice signals here. We're getting some nice signals to the upside, but this is where we really want to start looking for pullbacks on our lower time frame. Anything to the right of this vertical axis. Let's start taking a look here. Open up that 15-minute. So anything over here, we're going to start looking for pullbacks. And what does it do? Well, take a look. This is a structure right here. We'll turn it green. This is a drop base rally. And what does it do? Drop base rally eventually breaks through structure, right? It eventually breaks through this structure here. And what does it do? We get a pullback into that zone and then that rip out. Look at the pullback taking place around 8:15 in the morning on the 29th of August. Go to that 1 hour time frame and take a look. Look at how the pullback here took place inside of that blue shaded area on your CCI indicator. It never broke through negative 100. Never broke through negative 100. That's how you know you've got a strong demand zone. When the pullback into that demand zone does not break your CCI indicator negative 100. It just pulls back into the blue shaded area. That's how you know you've got a strong demand zone. And what does it do here? It creates another demand zone, right? On the 1 hour chart, it actually creates this right here, creates a 1 hour demand zone. But on the lower time frame, this is the pullback into this demand zone right here. This is the pullback into this demand zone right here on that 15-minute chart. Huge rip, right? So that is how you want to handle price when it enters into your curve zone there. And what did that cost us? What did this right here cost us on that full contract? Buy one. Okay, supply zone right there. That's still about $815 worth of risk, but that's because we're on the full contract. But look at the massive gain that we got. That's over a $7,000 profit. And that all took place within the day. August 29th, pulled in, 8:15 in the morning, and we pulled out of this trade pretty late in the day, right? So you would have to have enough money in the account to hold this overnight. As long as that's in your risk tolerance, no more than 5% of your account. That's really the max. We only like to do 1 or 2% of your total current account balance. But those are the demand zones that you really want to take advantage of when you get the pullback into your demand zone and not have it violate the CCI indicator negative 100 marker. Now look at our second entry here. What happens? We get this massive break above positive 200, pull back into the zone. We do not break through negative 100. Where does this pull back into? Boom. Just look next to it right there. Box it out right here. That is how you take advantage of strong supply and demand zones. Just use that 1 hour CCI indicator and you've got some massive profit potentials there. Buy one, stop loss, $700 risk, rip to the upside. Okay, $100 risk, little over $2,000. It does pull back a few here and keep going, but if you want to be in and out in one day, and look at that, it just bounces back and forth. This demand zone is so strong, breaks to the upside, breaks back to the downside, and finally hits our target. Okay, little over $2,000. That's how you approach entering a demand zone when you are low on the curve and you're trying to take advantage of an entry point inside of this extremely wide demand zone on the high time frame. So that's how you enter a trade on the high time frame curve. Hope you enjoyed this video. If you have any questions, just comment below and I will make you a personalized video on any contract that you'd like to see. Thanks, guys. See you in the next video.